Welcome to 2023, where the Australian property market is crashing. News just goes up and down, doesn't it? So we're kicking off 2023 with a chat about the Australian property market, what's happening across Australia's major capital cities and the other markets, and property prices. Now, there's been a lot of speculation and talk in this new year about the biggest decline in property prices, so let's dive into a recent article and have a chat about it. Australian property market hits record low, reports say. This came out on the 9th of January 2023. Australian home values have marked a record decline in the first week of the new year after peaking in May 7th, 2022. CoreLogic's daily home value index slumped by 8.4% in that time, breaking the previous fall of 8.38% between October 2017 and June 2019. This new fall played out over a much shorter period of time, in less than 9 months compared to 20 months on the previous record. Now, there's been a lot of talk about credit and what's happening in the economy at this point in time. So we're seeing a credit crunch where the cash rate has risen significantly over the last 6 to 7 months, sitting around a 3.1% cash rate. This means it's been a lot more difficult for people to get access to lending, and this is what is reducing property prices. Now, they're talking about the time frames that it only took less than 9 months in this case for the peak to trough in terms of the 8.4%, in comparison to 2017 to 2019, where they had over 20 months for an 8.4% drop. But this mirrors the movement in the cash rate. So as expected with Australia's economy and the RBA, and a lot of commentators are talking about this, the RBA is expected to settle on the cash rate in the next few months, and this will bring some confidence back into the Australian market. The most people who have been affected by this is people who bought at the peak and overpaid when they were buying in May 2022. We have seen some deals that have been some crackers in recent months because people were able to still get a reasonable price because sellers' expectations have been dropping the last few months. So there's always the opportunity to find the right property for the right price in the right location. It's just a matter of finding the right property for yourself and not overpaying on that deal. So CoreLogic warned further falls could be expected in the months ahead. The property data company attributed the record slump to the recent cycle of rate hikes that, in comparison to the record fall, had risen at the fastest pace on record. A collective hike of 3% in the cash rate in just 8 months not only saw borrowing capacity restricted, but could have put potential buyers off due to higher interest costs. The downturn has been the most apparent in Australia's big three property markets. And you can see here's the tracking of the cash rate between 2018 and 2022. Now in Feb 7th, 2018, it was a 1.5% cash rate, and that fell off all the way down till November 2020. And then we've seen the big spike up until December 2022 at 3.1% for the cash rate. Now, I personally can't see the cash rate going much over that 3.5 to 3.6%, but it could keep going, and that would create a lot of pain for a lot of owner-occupiers and some investors who have over-leveraged themselves with debt and not been able to manage their repayments. That's where those who have the buffers in place and the cash flow coming through, protecting them from these rate hikes will be okay. Sydney's home values have fallen 13% from their peak, 10% in Brisbane and 8.6% in Melbourne. However, in Perth, prices are down just 1% from their local peak in August 2022. CoreLogic's research also showed that the drop in house values had come from a historically high position. Though the 8.4% fall has been sharp, it followed a constant escalation that amounted to 28.9% between September 2020 and May 2022. So those who took action while the prices were rising will have seen some significant growth, up to around that 30% mark on average, and now are seeing a pullback at around that 8% mark. I can say that's probably been the case for our property portfolio personally. That was a bit of a tongue twister. Property portfolio personally is that we've seen the prices increase dramatically over the last few years, and now we've seen a small pullback in the value of the homes that we currently own in our property portfolio. That doesn't mean there's not opportunity out there. Even though they're talking here about Sydney, Brisbane and Melbourne seeing declines in Australia's major capital cities between 13 and 8%, that's off those major peaks, and there's always a deal to be had. There's always a distress sale, there's always an opportunity in the right location, in the nice quiet street, with access to local schools and the local transport infrastructure. If you're finding the right property for the right price in the right location, then it's going to make sense that you seize that opportunity and make that deal happen. For me, I'm not investing for the next 1 to 2 years or 2023 in terms of property prices. A lot of commentators and YouTubers and people speculate on the next 3 months. Well, I'm not so worried about the next 3 months. I'm more worried about the next 3 years, the next 30 years in terms of what's happening in our property portfolio. And for me, buying in locations like Brisbane makes sense compared to Sydney or Melbourne that have much higher median price points, which have much greater disparity between the income to actual property values in those locations. Even though I'm a Brisbane buyer's agent, that doesn't mean I don't think there's great options in Sydney and Melbourne if you can find the right deal. Or elsewhere in Australia. There's lots of locations across Australia that might meet your buying criteria. But you need to make that decision yourself, whether it's the right time to buy for you and that you get the right deal. At the end of 2022, despite the record drop, home values were still 16% higher than 5 years ago and a whopping 60 or 59.8% higher than 10 years ago. But the market conditions are expected to remain soft in 2023 due to forecast further interest rate hikes. Australians are also more indebted today than through historic periods of rate rises, with the latest Reserve Bank estimate of housing debt-to-income ratio sitting at 188.5%. A decade ago, this figure was 162%, and in 2002, the ratio was 130%. Well, that to me doesn't seem like that big of a disparity. 188% of debt-to-income ratio today compared to 162% 10 years ago, only a 20% difference. Doesn't seem like that big a disparity in debt-to-income ratios. Australians are comfortable with debt, and there's a lot of value in Australia's housing market. The government wants housing to succeed because it's predominantly owner-occupied, and there's a lot of industries driven off Australia's housing market. There's land subdivisions, there's sewerage and infrastructure and civil works that go into building the roads and allowing the water to get to new housing developments. There's the architecture and the design. There's the fit-outs of homes. So the Australian government does want the housing market to perform well, but not at 20% a year or 30% a year. The growth needs to be reasonable and sustainable in Australia's property markets. So you'd expect somewhere between, say, 5 to 10% growth year on year in the property market over the long term. Now, when it comes to 2023 and they're talking about a softer market this year, it totally depends on what you're buying and where. But yes, I don't think we're going to see another boom in 2023. We were talking in 2021 and 2022 about the boom, and now we've had that boom and we've had a pullback. I think now's the time to buy distressed properties or buy opportunities that are not junk stock that has the right opportunity. There is junk stock out there, deals that you don't want to buy and people are trying to flog off for too much money. But there are also, whether it's your own home and you're looking for the right opportunity, or whether it's an investment property, there's opportunities out there on the right street with the right block size, with the right orientation and the development potential for you to tick those boxes and meet that criteria and take advantage of the opportunities before us. This comes down to you as an individual. Everyone's going to be different. Everyone has different circumstances, but we need to also be aware that there's groupthink going on with the Australian property market. Everyone's looking at the RBA and seeing when is it going to be that the RBA gives us a bit of certainty in terms of the rates. And once I think certainty returns, there might be a push back into the property market as people understand, okay, I think rates might settle here for a while, whether that's at 3.3% cash rate or a 3.6% cash rate. Once there's a bit of confidence and the RBA makes the statement that they're not going to increase rates further this year, that's where I think there might be a pushback into the property market. So you probably either want to get in before that swirling pandemonium returns and people get confident and dive back into the property market, or hold off and continue saving your cash and coming up with a decisive strategy to make your next steps. Like I said, the property market is not just going to live and die in 2023. It's about the next 3, 5, 7, 10 years plus. You need to be looking for those locations that have long-term demand, long-term growth potential, and that you can potentially add value in the short term if you're looking for that type of project. There's also tenant-ready opportunities out there that you can get a good sized parcel of land with a good land value ratio and also has a reasonable rental income. We've actually made a purchase to start 2023 and I can't wait to share that with you guys on the channel sometime soon. It's going to be priced somewhere between 500K and $1 million, and we're looking to actually turn that project over this year. So I'm really excited to be sharing the numbers with you on that flip project this year. So make sure you subscribe to the channel for that. I'd love to hear from you in the comments down below. What do you think is going to happen with property prices this year in 2023? And if you could drop a like on this video, subscribe to the channel, that would really help me out. I'll see you in the next one. Peace.